Okay. So this presentation, I'm going to teach you about how to succeed with Forex robots, even if they've never worked for you before today. Seems like there's a lot of stock people here. So just in case you don't know what Forex robots are, they're automated systems. They usually trade Forex markets using a platform called MetaTrader. And it's very lucrative and it's very easy. You set it up, you forget it, and you're good to go. So it's been very popular over the years. A lot of people internationally, not in the US, use it, but there's a lot of US people as well. So depending on where you are, you might have heard about these things, might not. So let's jump into it without further ado. First, let me just tell you a little bit about myself. Why listen to me? I've been in Forex trading and systems for 13 years. I've traded. I've tested thousands of trading robots over the years. I've helped develop them, and I've run them on live accounts and demos, and I have crazy amount of experience with them and have been able to make a lot of money with them and help other people make a lot of money with them. So I do know what works and what doesn't, and can usually identify if a product is legit or not, because if you have any experience in this industry, you'd see that there's a lot of people out there trying to sell their own systems, and there's a lot of people who've gotten ripped off. We're going to cover all of this today on how to identify all this. And I'll cover what I've learned over the years to help you identify honest systems and what will work for you and best practices. So first, I just want to show you what a winning robot looks like, because you might not know what kind of money is possible. Here's one example of a system. I'm showing two accounts right here. This is for one trading system, which I'll tell you more about after. It's made about 6,000% profit in about a year. So it started with $1,000 and it's up to about $65,000 in profit. And on the bottom right, you can see some trades. You can see some trades on the bottom right. Those are all winners. There can be losing trades, of course, but this system has an over 90% win rate. So you can see that per trade, it's making $400, $300, give or take. So it makes thousands of dollars a week. And then on the left-hand side, you can see here, this is a different account, but same system for one client. They started with $200,000. They've made almost $200,000 in profits. That's 100% return. And that's been going for about 4 months, I think, give or take. So it's quite a nice return, if you ask me. And if you look at drawdown, one of them says 20%, and the other one on the very bottom, you see 10%. That really means how much in open trades, how much negative they can be they've been at one time. That's like a risk exposure on your account. So some people prefer to do very low, like 5% max. Some are a little riskier and don't mind going up 50, 60%. It really comes down to your risk. And when it comes to risk, that's a personal choice. You have higher risk, you get higher return, lower risk, lower return. But we'll go more into that after. Now I want to show you one more. There's a different system. This one doesn't have as many winning trades, but it's more of a system that trades all the time. But as you can see on the right, 60% profit in about, I guess that's 6 months or so, give or take, with only a 4% drawdown. So you see some lower risk, lower return, but still 60% is nothing to sneeze at. And on the left is the same system. We've had this one running for about 800 days, and it's got 1,000% return, and it's made about $35,000 in profit. So these are not always the typical results. It's going to depend on risk and whatnot, but I just want to show you what is possible with trading robots. And these are literally all autopilot. So you don't have to do anything. That's why I love this so much. You don't have to think, you don't have to do anything. You install it, you set your risk, and you can just kind of step away and check it from time to time. It's almost like a passive income source. So first, I want to tell you how to spot a real system versus a fake, because if you ever search for Forex robots, you'll find that there's a lot of fake ones and there's a few real ones, but sometimes it's hard if you're not in the industry long enough, you won't really know the difference. So most important is real accounts versus demo accounts. So a lot of the fake websites, they're going to only use demo accounts. And there are some legit ones that use demo accounts too. I'll have some systems where I'll show demo accounts, but I'm going to also show real accounts with them. So really, you really want to make sure there's a real account as proof, and there's a verification system, third-party verifier, called MyFXBook, and FX Blue is another one. Those both actually verify with the account login details that it's real. So they tell you if it's a demo, if it's a real, and often a legit company will usually give you some sort of verification like that. So you want to make sure there's some sort of real account to review. And then also another thing to look out for is extremely short results. I've seen people try to sell their systems and they've only had like, they show accounts, a demo account, even sometimes real, but two weeks worth of info with where the trading, and that's it. And they try to sell it like it's this great system. If you have 2 weeks of trading proof, it's not really going to prove much, because it could easily just be one little blip, a period where the robot did well, and then otherwise it's garbage and it's not a good system. So I try to make sure there's at least a track record for a few months before I release a system, or if I was buying one. Also, another way is sometimes these guys who sell fake systems, they're going to do one website with no brand. It's basically going to be one website dedicated to one system, and that's it. And those kind of websites usually disappear overnight, and they're just trying to collect as much money as possible, and they don't actually care if the system works or not. It's good when you have a brand behind a brand behind the system, where they have a website, it's a brand, and then they sell systems on it, and they're not going to disappear on you, and they're going to keep on supporting their products. And also, an obvious one is poor English. A lot of people who are selling bad systems, you can kind of figure out just by their English that when they have really poor English, typically you can't really trust them. And I've worked with people all over the world, and the legit ones, even if they aren't native English speakers, they still speak very well English when you're kind of like doing business with them. So it's weird. It's something I notice, and maybe in other industries you probably notice that too. It just happens. So I want to talk about a few strategies in which to choose, because you're going to come across some of these different strategies for systems. Systems could be, there's millions of combinations of strategies. It's infinite. You can combine indicators to make a system. You can set different stop losses, take profits, different way to manage the trades. You can do none at all, and then it can be dynamically closed. It's just endless. So the bottom line is there's different classifications you can classify these systems in, and these four are often what they get classified under. I want to cover what you should look for and which ones you should go for and which ones you should not. Scalpers are like the holy grail. I used to, when I met David years and years ago, I was actually selling one called $1 Million Pips. That was a scalper, and so many people made a ton of money from it. The issue with scalpers, though, is that trades can last for seconds at a time, and they go very fast. And the thing is, these days, it's very hard to get it to work. So I usually try to avoid scalpers. They're the holy grail, but it's almost impossible to get them to work on live accounts these days, only demo accounts. The brokers kind of, brokers and liquidity providers, they kind of made it so they slip trades and they slow down execution, and it kind of makes it almost impossible these days to scalp. It's possible, but it's so difficult to kind of replicate the results on a scale of like, if I gave 100 people here a Forex robot and it was all scalpers, I might be able to, maybe 2 or 3 people would make tons of money and then the rest wouldn't. So it's just not a realistic thing to be offering. And there is a bunch of websites, these guys who try to scam people, and they'll show you scalpers, but they're only going to show you the back test of the demos because it won't work on live accounts. So amazing systems, if you can get it to work, you're going to get phenomenal results, but most of the time they don't work anymore. Arbitrage is another one, just like scalpers. It's almost like scalping. It's where the trades are really quick and short, just like scalpers. But arbitrage is basically taking one price feed, like directly from a bank, comparing it to your broker, and it tries to get the pricing a milliseconds before your broker does, and then it trades on your broker before that price is reached, because it knows where that price is going based on the bank. And then you try to profit for that few seconds where it's different, because you know where it's going to go. And this is one that works too, but it's the same situation. So it's really only people who specialize in arbitrage who want it specifically and want to deal with the headache of it. It's worth it for them. But otherwise, if you want set and forget, scalpers and arbitrage, I usually try to avoid, because they're it's just not fun when you have to stress over it and watch these systems and deal with them. The ideal thing is you can work, you can live your life, and you have a robot trading for you, making money every day. And that's what I kind of focus on these days. And that's kind of from the results that I just showed you for those systems are from systems I kind of just forget about and let them run. So swing traders and day traders are the ones you really want to focus on. Swing traders are trades that can last anywhere from a day to weeks. And those are the strategies themselves can be anything, but that's how long they're going to last. And it's really hard for a broker to manipulate or do anything to sabotage those trades. So it's easier to succeed with those. And there's just a lot easier with liquidity, and you're in a greater, you kind of lock in more profits per trade. So even if you had anything where you lose a few dollars on a trade, you can be in profit $100 and maybe you only close at $95. You're only losing a little bit, so you still get the profit. Day trader usually is trades that last. Sometimes they can last a few minutes, but ideally they're going to last a few hours per day, sometimes longer, sometimes less. And those systems are great too. They're typically going for less profit, smaller wins, but they're really cool, fun systems because you're getting more trades, but shorter trades, and you're kind of locking in profits fast. So it's not as stressful as if you have trades open for weeks at a time where you might be thinking, oh man, am I going to lose money on this trade or am I going to win? So they both have their pros and cons, but both of those are viable options that you guys should consider when you are buying a Forex robot. So risk management, this is kind of what makes or break your results. So let's say you have a good system, a system you know is going to work. I've seen people who have a good system. They use my systems. Let's say I have two people, one person using my system with one way, and then another person using it another way. I've seen one person do phenomenal and one person lose. Same system, same great system, but opposite results. And it really comes down to risk management. So I want to cover that right now. Not all trading robots and systems are bad. It just sometimes you lose because of how it's set up. So most people lose because of improper management or not following the recommendations. What I mean by that is broker recommendations, putting it on the proper server, and just setting the proper risk. And I'm going to go over brokers and servers in a few minutes if you don't know much about that. So for example, I've had people say, hey, I'm only going to start with $100 just to test the system. And the bottom line is that's actually a bad idea, because they think that they're only risking $100, but what they're really doing is disservice to themselves. When you use a small account, even if you use low risk, there's not enough margin to give the system breathing room. So if you have like some bad trades, for example, let's say you have a trade that goes against you $50 on a $100 account, that's $50, that's 50% drawdown. But let's say you have a $1,000 account and you have a trade that goes against you $50, you're talking about 5% drawdown. So it's a big difference. It's the same amount of $50, but for one account that's only 5% and one account's 50%. So the bottom line is sometimes too small of account can get ruined from safe trades that are really not that much money in down, but because the account's so small, it can tank your account. So if you only have if you're down $50 on a trade with a $100 account, 50% is pretty dangerous. It means you can lose that $100 if it keeps on going. If you have $1,000 account, it's only down $50, and let's say a worst case scenario goes to 100 before returning to profit or just closing at a loss, you're not losing a lot of money percentage wise in the big scheme of things, and the system can easily recover it. And worst case, if you do want to test the system, I say use a demo instead and then test it on live once you're comfortable, because a demo account, you can do $5 grand, 10 grand, 100 grand, or 1,000 grand, or whatever you want. But people make that mistake of using too small amount. For example, also one of the systems I showed you, the recommended minimum is $3,000 to $5,000. If someone says, hey, I'm going to just test it on $500, that's a bad idea. There's a reason the minimum is $3,000 to $5,000, and that's why they lose. Most important is follow the risk recommendations. There's going to be low risk, as I mentioned earlier, low return, and high risk, high return, or there's also medium risk. And the bottom line is, if you're doing low risk or return, you're still going to get a great return. That will be, for example, the average stock market returns of 9-10% a year, or whatever it is. You can, even with low risk, you can beat that, but you're not going to get rich overnight or make amazing returns. that I showed you in a few slides ago of 6,000% in 1 year. You're still going to make a great return, but you're not going to blow your account. So low risk is something for the people who are more risk averse to consider. And then you have high risk, high return, where for example, you see I have 20% drawdown on the account at one point, but I had 6,000% profit, which means I had trades that were open and the account was negative 20% in those trades, and then eventually recovered, and it kept on growing, and it eventually reached that 6,000% profit. But that's high risk, and that's something that people have to be willing to accept if they want that. So you have to understand what risk you're using, so you don't think, hey, this is a scam, or you get nervous, because you have to be comfortable with what it is. So for example, if you don't mind losing $2,000, you go high. Some people will go high risk and they'll end up making a ton of money, or they'll lose it, but they knew what they were getting into, and that's all it is. But if you're not comfortable with that, you do low risk, and chances are you're going to make money, because you're not going to blow the account, and it's going to keep on growing. Even if it has a loss here and there, you're still going to keep on growing, because the low risk doesn't take as much losses. But the bottom line is Forex always has risk, unlike other investments. So a good practice is pull the profits out and put them on the side. You want to get capital out ASAP, so it's free money. So basically, let's say, for example, you deposited $1,000 you're trading, and you want to keep on pulling out some of the profits. So eventually you pulled $1,000 out, and now you're working with house money, which is $1,000. So even if you lost it, you're fine. That's something to consider. That's a trick that some people use, so they don't lose their money, and now they're working with free money. And some people prefer compounding their results, where they leave the money in, and then they'll raise the risk as the account grows. So there's no right answers here, but you have to understand the risk management and what you're comfortable with and what you prefer. And that's how you get the most out of these trading systems. And there's something called the grid and martingale. There's a stigma about these. There's a lot of people don't mind them, and there's a lot of people who are like, oh my God, I can't use those because they're going to destroy my account. And I do have some systems that use them and some systems that don't. And I'm actually a big fan of grid and martingale when it's used properly, because the bottom line is grid and martingale make a system more profitable and grow and less losses. But how they're managed is basically can be risky at times. For example, grid is basically where a trade may go down to negative, and it'll open another trade. It's almost if you understand cost averaging, it's like a cost average. Say a stock goes down $10, you buy more. Goes down another $10, you buy more. Another $10, you buy more. That's what grid is basically, and it just keeps on buying at every certain level. And then when it returns, and then when the stock starts going back up, same as in Forex, then it will close. You won't need as much. You won't need the stock to go up as much to return to profit. So the grid will actually aim to get you into profit sooner without actually having to go back to that original price that you started at, and then it will go for its target, close it out, and it'll be done. So you'll never have to actually return to that previous price, which makes it so you don't actually, if a currency pair, like let's say the euro, dropped a certain amount and you don't think it's going to go back up to what that amount was, the grid was great, because you'll actually still be able to get the profit on a reversal, even if it never returns to that price point. So there's positive and negatives to using that. And where it can be dangerous is if it keeps on going down, you can obviously lose your account. But there's protective measures, like some of our systems that use that. They have fail safes where there's a percentage where they'll close out all the trades to protect your account. Martingale means that the bet size goes up. So in terms of, seems like people know a lot about stocks here. So I'm going to give you examples of stocks. Let's say you buy one share, stock goes down $10. Now you're going to buy 2 shares. Stock goes down again $10, you buy 4 shares. So you basically you're doubling your investment each time. So that means if the stock only goes up a tiny bit, you have so many more shares that are at the bottom level than at the top level. So it can hit profit really quick. So you have grid and martingale often working together and reaching profit really fast when you use those two tools. So in and of themselves, they're very dangerous, but when they're used properly, and you mind the risk and you set the risk properly and have fail safes, they can be very useful to succeed with Forex robots. You just don't want the ones where you have some people who are basically just trying to sell robots. They might use grid kind of just to hide their bad results, and eventually those systems will just crash and they'll burn your account. And those are the ones that they kind of just like, they pick any random strategy and they just go unlimited grid until it makes you money or it crashes. So those are the ones you have to kind of look out for. So I was mentioning before, brokers and VPS. Brokers do make a difference. And I've seen people lose money on one broker and make money on another. And it's because brokers do make a difference. And some people think they don't, but they do. So picking a broker is very important. There's eBook versus eBook. eBook basically means that the broker is passing your trades onto a liquidity provider. And your trades are executed on there. And then if you win, the liquidity provider is providing the profits back. And if you lose, they take the money. eBook means that the broker itself is actually betting against you. So if you win, the broker has to pay you from their own money. And if they lose, they get to keep your money. Usually the eBook brokers, you got to be a little weary of because they may not all be honest because they clearly want you to lose. So I usually prefer to go with eBook brokers because they're more honest. They actually make money if you make money. And if you keep on making money, then you're going to keep on trading. And the more you're trading, the more risk you're using, the more eBook makes. So they want you to win. So they're not going to want to sabotage your trades. You also have price feed differences. You have slippage, you have spreads. Price feed differences mean that the pricing that they're getting for the specific currency pairs be slightly different than somebody else's. You also have slippage, which means that when a trade opens or closes, it can slip a little bit on the price from what you chose to close it at. Some brokers might have it worse than others. And spreads are basically how much you're going to be, same in stocks where you might buy, you have a spread, a bid and an ask. So the difference is the spread. That's usually where the broker makes their profit, or they'll give you a much lower spread and they'll charge a commission per trade. So all these things are going to come into effect on how your trade outcomes are with robots. So you have to mind all these variables. And then, as I mentioned, some brokers try to manipulate so you lose. And those are typically the B brokers. And how I mean by that is some of them will actually try to push your trades to hit your stop loss. Sometimes they'll just be different. They'll slow down your trades. They do little different tricks that are hard to notice that some people never even know, that kind of look like they're completely normal, and with the intention of making you lose. So you got to be careful. That's why eBook is not always the best. So that's why one Forex system can trade well from one broker to another. And there's many good brokers out there, and there's many bad ones. I prefer www.blazemarkets.com broker. It's one we've been working with for a while. They have great support, fast withdrawals. They're eBook. They're created by traders for traders. And most of my trading systems and other ones I've used work great on there. So you obviously don't have to, you can use any broker you want, but that's just one I prefer. VPS do make a difference. If you don't know what that is, a VPS is a virtual private server. It's kind of like, imagine having your own computer running at home, but now you have one that's like its own website, but Windows is running on it. And how it works is you can connect to the VPS and it opens up on your computer and it's like controlling Windows. And what people will do is they'll install their robot and the trading platform on there, and they'll exit and it'll run 24/7, even if their computer is off. So basically you can have your computer off, you can be traveling, you can be living your life, and it'll always be running on the virtual server. You can check it from your phone, from your tablet, from your computer anytime, and it's constantly running. So it's great because you don't have to worry about your computer always being on and connected to the internet, which can be dangerous if something goes wrong. And another great thing about VPS is location. So you can actually have the location of the VPS near the broker server, and that actually speeds up the trade. So you get better trade execution, and you get a better you get a much closer price to what you were trying to get in on a trade, which is great for most Forex robots. It's usually really important for scalpers and arbitrage, and not as important for the day traders and swing traders, but it still can make a difference. Speed is there too. It just, you get fast, reliable internet on these VPS. So if you have connection outages or interruptions in your home, you don't have to worry about that with the VPS because they're just constantly running. They're also very reliable. You're only running these things on there. You're not running other software. So you don't have to worry about other software crashing it or just any interruptions or anything like that. So it's very important to use VPS. And I do have a few recommendations on my website at www.leapfx.com/VPS. So I just want to tell you about some trading systems that I recommend. I've showed you how to give yourself the best possible advantage with Forex Robots. Now I'm going to show you these recommendations. Basically, at the very beginning of the presentation, I showed you a few proofs. I'm going to tell you how you can get those systems if those interest you. But first, you can learn more about my company and the robots and services we offer at www.leapfx.com. LeapFX has been around for many years. We try to test and release the best possible trading robots we can find. And our goal is legitimately to help you make money. We really do take pride in what we do, and we want to help you succeed. We make money for trading our systems. We make money helping people make money with systems, and it's just something that we enjoy doing. There's the two systems that I showed you before. I highly recommend, and they're quite successful for many people, and they're some our most popular. You can actually watch the presentations. You learn more about trading robots if you don't know a lot on these presentations, and you can see the verified accounts as I mentioned. One of them is www.leapfx.com/themoneytree.html. You can go there, enter your email, and it will take you to the presentation. You can watch it and see the proof and learn more about trading robots. The other one is www.leapfx.com/tradeexplorer.html. This is an older system, but it's been going for years and it's very successful. And this is the one I showed you that had the 1,000% profit with the low drawdown on the other picture next to it. And Money Tree was the one with the 6,000% profit. Both are great systems. I highly recommend checking them out. And there's a money back guarantee on both. So you can try them, see if they're a good fit for you, follow the recommendation risk rules, and you have a huge chance of succeeding. And of course, you can actually reach out to me personally. My name is Cory Ross. You can actually email support@leapfx.com and ask me anything about these systems. If you're new or if you have experience, I'm happy to help. So that's pretty much the end of the presentation. If anybody has any questions, I'm more than happy to answer. And let's see what we got here. Oh, okay. All right, let's start at the top. What are the typical annual returns for Forex bots you've worked with? So basically, as I mentioned, it's really going to come down to what you set for the risk. Me personally, when I'm using systems, I like to aim for medium to high risk, because I want to see full-time income replacement. So that's why you see the 6,000% that I showed you. If I was if I was trying to just go for like slowly building some wealth, and I don't need that as income or whatnot, but I wanted to build something and not really worry about risk, then I would aim for something that was a lower return, like 10, 20, 30, 40, 50% per year. But again, that really comes down to what you're using. And if I just read you said typical. So if you want typical, I mean, a lot of the systems I offer, you'll be able to see on the website on leapfx.com, and typical is usually, it could be anywhere from 100% to multiple thousands percent a year return. It really just depends on the trading style and the risk, and you'll have to look and choose. The next question is, how do you know if the broker is A or B? Most of the time, you're going to have to just ask the broker, and sometimes they're not always going to be honest. That's an issue. So sometimes you're going to have to Google, and you might be able to find someone who shares that information. Or sometimes you have to find someone you can trust who can tell you the answer to that. It's kind of hard. I mean, if you email me and you have brokers that you tell me, I can kind of steer you in the right direction and tell you if they're A or B. I recommend Blaze Markets, like I said, .com, because I know that they're a market. eBook. I've been working for them years and know them very well and trust them. Next question, based on your experience, what markets do bots tend to work best for? So I've actually designed the bots to work on not only Forex, but we've had them trade for crypto over the years, and for stock indexes and whatnot. So ideally, I find that Forex, they work the best for it. Like, it's just most profitable, safest. Crypto, they can work, but I find that the risk ends up being too much, because just the way crypto markets run and the way the leverage is designed for them, because the leverage is a little different for crypto and what the liquidity providers allow. I find that crypto can be a little riskier with any strategy. Oh, also gold and other commodities can be traded with them. Gold, silver, oil, and other things. I found that those could be a little riskier, but again, they work well with those. Forex pairs is just, I highly recommend. They're just the best. It really doesn't matter what you're trading. It really matters that you're making money from what you're trading. So I really just prefer Forex pairs mainly, but I do have some systems that trade indexes. I have a system that trades the DAX, which works pretty well. And that's German index fund. Crypto, I kind of stopped releasing those a while ago, but I do have a system that we're going to release some settings for to work on Bitcoin. But I just find that crypto can be a little, the volatility and the movements not always conducive for all robots. For options and stocks and futures, you can actually trade stocks a little bit on these Forex platforms with the Forex robots, but I don't really usually do those because I like to stick with what I know that works, and that's Forex. And then there's other systems you can use for stocks and options where, like, for example, Ameritrade and others. I don't know which one specifically, but some of them do let you have APIs and stuff, and they let you code your own robots. I don't usually work with those. I found over the years that Forex has just been my bread and butter. I found that it's the most profitable, and it's just between leverage, the kind of leverage you get, and what you can, and the strategies you can deploy. I find that Forex is just far superior for trading, for getting those big gains in short periods of time. Does anybody else have any questions? I think we might be done with questions. Oh, David, you want to, oh, actually, no, I can post in here. I'll post the other links just in case people want to check them out. That's the money tree one that I mentioned. That's the one that did 6,000% if you want to check it out and watch the presentation. You can also learn more about robots on that presentation because I teach a lot on there. And Trade Explorer was the other one I showed, which is a great system. So if nobody has any more questions, we can end, unless you want to squeeze in the last question, let me know. I guess we're done.